Hello, good afternoon. You've tuned into your stocks on CNBC-TV18 and I'm Vinny Motiwala in the Mumbai studio. A quick look at what the market is doing. While the Nifty has remained quiet in the range of 23,800 to 23,900, let's pull up the Nifty mid-cap because now from the red again it's moved back to the green territory and Nifty mid-cap is up almost 0.1% in trade as of now. Small cap also is managing to hold on to gains. Look at the Nifty mid-cap right now. Just a short while ago, it moved to the green. Small cap was holding on to the green for a while and now seems like it's just picked up some bit of the pace, but 0.4% of gain coming in for the Nifty small cap. Nifty Bank holding on to gains of almost 0.4% of in trade as well, off the day's highest point nonetheless. But that's how the overall market is also looking like. And, in terms of losers that we're seeing coming in today, we have metals and PSU banks that are not doing well. So yes, watch out for that segments and sectors as well in terms of individual stocks. Metals clearly opened up in the green and then fell down. Similar for the PSU banks, also opened up in the green and then moved to the red territory. So trying to make a comeback, but doesn't seem like that is quite going to be possible as of now. On that note, we'll start with all your stock related queries and we have our experts joining in with us. We have Shahina Mukadam, independent market expert, as well as Vaishali Parekh, vice president technical research at Prabhudas Lilladher, joining in with us this afternoon. Good afternoon, ladies. Thank you so much for joining in with us as always on CNBC TV18 to solve all our viewers' stock-related queries. I'm going to start with the queries today itself, and the first query today we have is coming in on the stock is VIPRO. We have Sudarshan who's writing to us from Karnataka. He's holding 200 shares of VIPRO at a price of 204 rupees per share, making a profit on this one. So wants to know the future prospects of his holding. Shaina, let's talk about the long-term and fundamentals of VIPRO. What should the viewer be looking at now for VIPRO? IT as a story, do you think that's just beginning to pick up pace? Because last year, obviously, it was a bit subdued in terms of performance, but now seems like a different story coming in.
Yeah, absolutely. This year, I think the IT sector, especially now, is starting to get back on the buying list of investors. VIPRO, if you saw, this second quarter numbers were pretty good. They were beat on all parameters. The disappointment came actually on the guidance for the third quarter. And based on that, the stock has been actually consolidating. Having said that, I think it is a hold from now on for at least the next 2 to 3 years, given the fact that I believe revenue growth over the next 3 years would be around 3%, backed by an EBITDA of about 16%, which makes it a decent bet in terms of valuation if you have got a 1 to 3 year holding period. So I would suggest a hold.
Okay, a hold coming in from your side on VIPRO. Vaishali, on the charts and technicals, what's your word for VIPRO? YTD, we're looking at a 29% uptick coming in. And in this YTD performance, when you look at it, Nifty IT was 23%. So seems like VIPRO was surely something that is coming in terms of an outperformance versus the Nifty IT as a whole. On the technicals, how is it looking?
Very good afternoon, ladies, and to all our viewers. So yes, I do agree. Overall, we see that IT sector on the whole and pharma sector, they should be outperforming, and that is very much shown on the charts as well. So talking about VIPRO per se, I think it's already got into a trend. It is right now also, in spite of all the choppiness that the market has been witnessing, the profit booking, but it's still holding very well. So that implies that, yes, the strength is likely to continue. So I would say 300 would now act as a near-term support. And I would look at a trading strategy, positional trading strategy going up to 345 to 380 levels. So my bias is positive. The view gets negated only if we see a close below 300.
Okay, bias is positive as of now. View is negative only if it closes below 300. That's the word on VIPRO. Let's move on. Raghuveer Jain is writing to us from Mumbai, holding 10 shares of Hitachi Energy at a price of 10,617 rupees per share. Obviously making a profit on this one. He's saying that in the medium term, he's looking as a medium-term outlook, whether he should continue to stay invested in this one or, maybe book out his profits. What's the outlook on Hitachi Energy, Shaina?
Well, the valuations are extremely expensive. Having said that, I believe one can continue to hold, but keep a very strong stop loss. Basically, because, of course, the investor is making money. Even if he keeps a stop loss 2,500 rupees lower than current levels, he still will make good money. Basically, the issue is that they have got a good order book position. They are doing pretty well in their businesses in terms of renewable energy power systems because there is a lot of demand that is ongoing. And they had actually taken this business from the power grid business from ABB somewhere in 2020. And post that, they have actually turned around the business and are doing pretty well. They also have a
Sure.
lot of international orders for their power systems. So I would say it's a hold with a stop loss.
Okay, hold with the stop loss. But I just want to mark before I come to you, Vaishali, we have the rupee. Now that's seen a recovery from the day's low as of now is what we're seeing coming in. Rupee is at around 85.5 right now is what we're looking at. But sharp recovery from the day's low is what we're watching out for. For the rupee, almost 30 paise from the day's low is what it's gained. So surely keeping an eye out on rupee today. We're seeing a lot of move coming in for this one. But, let's move on and actually move on to the next query. We have this one is on Bajaj Finance. We have Srinivas who's writing to us from Karnataka, holding 300 shares of Bajaj Housing at a price of 136 rupees per share. Long-term investor wants to know what should he be looking at now in terms of the stock move. Should he continue to hold this for a period of 2 to 3 years? Vaishali, your view on the technicals?
So technically, I would say the stock has really been corrected, and right now it's already in the oversold zone. And I think there are good signs of a revival because the RSI is also trying to make an attempt to bounce back. So I would say purely keep a stop loss because we have seen a cluster of support coming in at around 123, 124. So I would say keep a stop loss of 120 and wait it out because once the stock moves above 135, it triggers a further strength to look forward to a target of 150 and so on. So I would say have a view periodically and hold on with a stop loss of 120.
Okay. And Shahina, your view?
Well, the valuations are extremely expensive. It's 8 times price to book. So yes, I would hold. It's consolidating, but hold it with a strict stop loss.
Okay, hold it with a strict stop loss. That's the word coming in from both Vaishali as well as Shahina. But on that note, we're going to slip into a very short break, viewers. Don't go anywhere because on the other side, we have a special segment, the Growth Code, an initiative by Grow and CNBC-TV18. We'll address our viewer questions on how to develop smarter trading habits. So stay tuned in for that. Welcome back to the Growth Code, a special initiative by Grow and CNBC-TV18. Whether you are new to investing or a seasoned professional, our goal is to provide you with actionable insights and strategies to navigate the market, make informed trading decisions. And today we will address the viewer questions and explore how capital size can affect confidence and decision making and understand the risk that is there of trading with a small capital. And obviously we do have our experts with us, Shahina Mukadam, independent market expert, as well as Vaishali Parekh, the Vice President of Technical Research at Prabhudas Lilladher, who will be solving all those doubts. Ladies, just let's get to the queries that are coming in. Now, the first query we have is from Karthik Kumar, who's writing to us from Bihar. He wants to know the risk that is associated with trading with too little capital, and he asks further that if the capital size will have to be have any bearing on the confidence and the decision-making skills. Shahina, let me take it to you. What is your advice to the viewer, and what are your thoughts on this?
See, what I would say, it's not just the size of the capital that you deploy in the market that is relevant. It is what that size is in comparison to what are the various other factors that are important. Like, for example, your risk-taking ability, your age, your savings, your expenses, and what percentage of it is what you're looking to deploy in the markets. So it is important that there is a proportionate amount that you take in terms of risk by investing in the equity markets. And that is something you need to actually stick to.
Okay. And Vaishali, your view, anything different in terms of technicals also that the viewer should keep an eye out on if it's too little a capital?
So I would definitely say in stock market, there's nothing sure shot. It's all about evaluation. Once you gauge the risk appetite and against that, what is your reward? I think everything, whether it is an investment, whether it is a trading strategy, one needs to have a discipline because even big amount of capital is not going to take you anywhere if there is no strategy planned. So I would say one has to be vigilant as far as that is concerned. And when there is limited capital, I think one needs to do thorough research, at least from the fundamental point of view also, so that there is no erosion of capital.
Okay. Let's move on to the next query. We have Ritesh Jain, who's writing to us from New Delhi. He says that he has a small trading capital of 10,000 rupees and he's feeling quite hesitant to take any risk on this front because the capital is also small. He's asking how he can build confidence while managing the risk very effectively. Let me take it to you, Vaishali. What's your thought on this?
So when this is the type of amount that he's trying to invest in, I think SIP would be very good. Systematic investment planning. At every juncture, whenever he has some capital, he should start investing in good quality frontline stocks. So over a period of time, he will see good returns.
Okay, SIPs is the word coming in as a best option for Ritesh from Vaishali. Shahina, your thoughts? Anything the viewer should be specifically considering given that the capital is just 10,000 rupees that he's looking to invest right now?
Yeah, as long as this is the surplus that he is looking to deploy, which he would not be requiring for quite some time. So that money he can deploy, keep all the risk parameters in mind. Look at the fundamentals of the company if you're going through the fundamental route. If you're looking at technicals, then you must have stop losses, targets, pre-plan your investment strategy, and then you can invest your surplus income for wealth creation.
Okay. Let's move on to the next query. This one is coming in from Gitika Tiwari, who's writing to us from Bihar. She says that she often finds chasing high-risk trades to make quick profits with small capital base. She asks how she can shift to a more disciplined and sustainable trading approach. Shahina?
Well, as I said, risk management is the key for investment in terms of the equity markets because it is a risky market to invest in. You need to have your target stop losses in place. You also need to be limited in terms of the leverage you're taking because if the markets are volatile, then there is a risk that you will lose a large part of your savings. So do not take big leverage positions when there is volatile markets. And also, I think you should look at fundamentals. You should avoid companies where the fundamentals are weak, valuations are expensive, and also do not just follow tips blindly.
Absolutely. Just do not follow things blindly. That's also important to know, right, while trading. Vaishali, what's your view? Because everyone always thinks like they want to take the risk, but the capital is small. What would you advise, Gitika?
So I would say, actually to gain knowledge these days, which is very easily available because we have various platforms. So one can get aware. And I would say Technofunda works hand in hand because the difference is fundamental is always going to tell you what to buy, but the technicals will tell you when to buy. So as her question is specifically that she gets anxious and she doesn't know, she pre-books her profits. So I would say once you follow a trend, because technical analysis is going to teach you as to where there is a resistance, whether we are seeing further high projection. So a little bit of knowledge in all this aspect will help her to gain optimum profits.
Okay, let's move on to the next query for today. We have Rahul Kumar, who's writing to us from Pune. He's asking if trading with a small capital base will limit his access to certain strategies. And he also asked what are the best ways to optimize returns without over-leveraging. Shahina?
Well, as I said, we have to keep repeating this. I think risk management is the most important factor. This works even both different parameters, but for fundamentals also, you need to have a proper risk management in place, even for technicals. Fundamentals, of course, there are various parameters that you look at in terms of, the quality of the company, the quality of management. And to an extent, even the government is working, SEBI is working to limit the exposure or risk that retail investors are taking, especially in the derivative market. So I think if one is careful, one can make good returns in the market as long as you have a long time horizon.
Okay. And Vaishali, your thoughts?
So I would say, one should change a little bit of strategy. I mean, continue, I would say at every juncture, whenever there is an opportunity, continue buying good stocks, because that is what is going to generate wealth. But if you are only still adamant on only trading, then discipline, as I repeat, that yes, you have to calculate what is your risk. And if the stock goes against your view, you have to be very prudent enough to exit the stock. So if you follow this discipline, your erosion will not be there and you will get a good return as against that.
Okay, let's move on to the next query. Shruti Mishra writing to us from Lucknow. She is saying that she gets emotional and exits trades too early when her capital is small. She asks for techniques to stay objective about and avoid panicking in such a bad and taking bad decisions. Shahina, I think we have to consistently tell them, right, to manage their risk properly, but anything on this front?
Yeah, well, a successful trader, there's a quote that says, plan the trade and trade the plan. That shows that you need to have a strategy in place before you start trading in the equity markets. Also, of course, you need to, as I said earlier, need to invest in fundamentally strong companies, have a plan in place. Trading also, you can use various technical parameters, have a stop loss, have targets which you can actually follow. So have a plan in place when you start trading in the equity markets.
Okay, have a plan in place. That's the advice coming in from you. But Vaishali, let's take our next query. We have Vivek Khurana who's writing to us from Chandigarh. He says that he heard that having a large capital can provide psychological comfort in trading. He asks, how can small traders like him overcome the fear of losses or make better decisions?
So, well, agreed. People having more of capital are at ease. But having said that, I still maintain that yes, even if you start with minimum capital, I think go gradually. That is because everyone these days are trying to get a quick way to success. And in my experience, it never has been the case. So I think just slow and steady will win the race. So go as per that and gradually start accumulating. Once you get profit, you may increase your stakes. So yes, disciplined trading as always.
Disciplined trading as always. Slow and steady wins the race. That's a one to always maintain in life as well. But, that was the last query for today. So, Shahina as well as Vaishali, thank you so much for joining in with us on CNBC TV18. Happy weekend to both of you all as well. But with that, we're absolutely out of time on this edition of Your Stock. So, thank you so much for tuning in. And always remember, you can email us your queries and we will address them with our experts. But up next, we have Closing Bell, so don't go anywhere.